Report. I'm Max Keiser. And as promised, the man, the legend, Eric Sprott of Sprott Asset Management. Eric Sprott, welcome to the Keiser Report.
Max, very happy to be here, particularly because you've been such a stalwart in pushing people towards silver, which I think is the best recommendation anyone can make this decade. And I'm happy to aid and abet that cause in any way I can.
All right, Eric Sprott, you've called silver the investment of the decade. I take it you still stand by that statement. Well, give us a rundown of where we are currently in the silver market.
Well, I've always looked at silver and gold as a situation where the demand will exceed the supply. And when I looked at gold in the last decade, we had a great change from the demand side, where central banks used to be sellers and became buyers. We used to have no ETFs, now we have ETFs. We used to have mining companies would hedge, now they don't hedge. And the shifts in ownership have been dramatic in a market where we really see no rise in supply. In the case of silver, what really turned me on about 12 months ago was as we witnessed people buying silver, you realize that there would not be enough silver to buy. And as examples, the U.S. Mint today sells nearly dollars of silver and dollars of gold. When you realize that silver trades at a 40-to-1 ratio, it means they're buying 40 times the physical ounces of silver as they're buying gold. When we sold our gold ETF, we raised $440 million. When we sold our silver ETF, we raised $550 million. James Turk of Gold Money, he sells more dollars of silver than gold. We have a little company called Sprott Money that sells gold and silver coins. We sell way more dollars of silver than gold. And so here we are in a situation where the price is 40-to-1, but the dollars going into it are almost dead equal. So I can't see the price ratio staying in this range.
All right, now recently the price of silver got up to that all-time high of 50, didn't quite break it. Then a lot of things happened concurrently. First, Jim Rogers opened his fat trap and said that silver was in a hyperbolic move. Now this seemed to get the hedge funds to start selling silver. But more importantly, this is what I want to talk to you about, because there's a lot of chatter about this. I want you to help me straighten this out for folks. Widely reported that you sold units of PSLV. This is the Physical Silver Trust. It's not really an exchange-traded fund. It's an actual trust with actual metal in it. Many took this as an indication that you had sold silver. There's a lot of chatter about this. What exactly is going on there, Eric Sprott?
Well, Max, that's totally the wrong interpretation that people should have made. As you know, we have to file to be a seller because we're a major owner. The units I got up to about a 22% premium to the underlying net asset value. We had filed, we had some sales. But as I've stated last week, every dollar of those proceeds went either back into the silver market, because fortunately we can buy silver basically at spot, and or it went into silver shares. We have been a net buyer of silver every day. I will be a buyer of silver today. I'll be a buyer of silver tomorrow. So we have not lost any faith in what's happened to silver. And if I may, I'd love to comment on what happened last week, and I'm sure you must have these same thoughts. But in my mind, it was just another one of those raids that we experience from time to time. It got bludgeoned in the very quiet hours of last Sunday night. There was no particular reason for it. And then we end up with 5 margin rate increases. It just reeks of somebody manipulating the price of silver down. And that's totally my attitude. I have no fear of silver here. Yes, it will be parabolic, but it's going to be way more parabolic than we have today. I've always thought that silver would trade at a 16-to-1 ratio in terms of price to gold. To make it simple, if we imagine gold at 1,600, that would suggest that silver could go to 100. I think it might even overshoot on the downside, maybe trade as much as 10-to-1. And the reason I think that is I believe that gold today is the de facto reserve currency. It's outperformed everything for 11 years. Silver's always been a currency. People are now treating it as a currency, much as you are recommending to people. And it's a very, very small market. There's no way that with roughly $50 billion of silver inventory around that we can make it a currency at these price levels. So I see the price going much higher.
You talked about the price action in silver recently. You described it as a raid. Now, let's talk about some of the specifics here, because people understand what this means. If you're talking about the fiat money world and the central bank world, they have an incentive to keep interest in paper versus metal. This has been an historic tension. So periodically, there's an incentive to try to keep metals as cheap as possible to get people more interested in paper. But how to specifically go through some of the bullet points of how a raid goes down when they attack silver and gold.
Well, I mean, Max, first of all, I base this on our experience over the last 11 years in the gold and silver markets. We get these very, very sharp declines. I think last week's decline was premeditated. It happened in the early hours of Sunday/Monday morning when markets weren't really operating. England was closed, China was closed. It was a great opportunity just to mark it down. And then, of course, the margin increases just as the price of silver is down $6, which puts everybody under stress. So I think it was very much orchestrated. One of the things that I think we should all look at is the trading of silver in the paper markets, which I mean the COMEX and the SLV. Last week, it probably averaged 1.2 billion ounces per day. There's only 700 million ounces mined in a year. There's only 33 million ounces of physical silver at the COMEX that's available for delivery by the commercial shorters. I mean, if something like 3% of the people who were trading silver, 3% in one day, demanded physical delivery, there'd be no silver on the COMEX. So I look at all these paper markets, and I just believe it's paper, it's guys pushing buttons who really have no vested interest in silver other than trying to move the price one way or guess which way the price is going. So I think the key market's the physical market. What are people doing in terms of converting their fiat over to silver and gold? And obviously that is has a lot of momentum today. And I don't think this raid is going to work, even though it was shocking last week.
Well, and you've done a lot of work in your newsletters and your research on the supply side of what really is above ground in the silver market. And you noticed that some supply was overstated or double stated. Correct me if I'm wrong, you're talking about there being approximately 1 billion ounces of supply, half of which are in ETFs. And some pundits last week were suggesting that, there's actually 18 billion ounces out there of silver. What are the true numbers, Eric Sprott?
Well, I don't know that there are good numbers, because most of the numbers that have been prepared for the silver industry come from a couple of sources, which we don't rely on because we think the data is misleading. And they always show the demand and supply of silver is balanced every year, which we know is poppycock. And we proved that the investment demand was way beyond the investment demand that these organizations were suggesting. So I, for one, don't believe any of the data. 1 billion ounces is the commonly referred to number. As you know, between the various ETFs and trust funds such as ourselves, you can easily account for 500 million of those 1 billion ounces, so they're really not available. And 500 million ounces at $40 an ounce is a mere $20 billion, which is hardly a lot considering what institutions could do in terms of moving into that market. And I might comment that, the institutions were slow to get onto the gold market. And, I described some of the people who bought back in 08 as Johnny-come-latelys because we already had an 8-year bull market in gold, but a lot of people thought it was the start of something. And, of course, the timing was good because of QE1. Those same institutions, I do not believe, are involved in silver to any extent. And I suspect that they will get involved with silver. And, of course, once they get involved with silver, there's going to be a horrendous shortage of silver. And Max, one further thing back to the raid. As you well know, the commercials are short silver. And I think it was just getting totally out of hand from their positions when silver was $50 an ounce. The margin they had to keep putting up. And that's why I think this raid was perpetrated. It was more to get the shorts off the hook than it was to reduce the speculation of the longs. And, we always characterize the people that are long as speculators. Well, what about the people who are short? That's an even more of a speculation when you realize that your losses are unlimited. So I think it was just like the way they nailed bunker hunt is what they're trying to do this time. But I don't think they're going to be that successful because there's so much interest worldwide in silver. much of it a credit to you and others that have recommended silver. But it's a worldwide phenomenon. It's not one guy taking on the COMEX.
Right, good point. The speculating on the short side is far more inconsistent with keeping a fair and orderly market than any so-called speculating on the long side. Let me ask you one last question. I had the CEO of Endeavor Silver on the show a couple of weeks ago, and I asked him the question, what would happen to the price of silver if 1 million people bought an ounce today? If they took, 1 million ounces of silver off the market in one day, one swoop, one order, his estimate was, well, the market would have to immediately discount that as a phenomenon that would perpetuate for 365 days in the year, and you'd see a 30% markup in the price of silver immediately. That was his answer. So I put it to you the question: 1 million people buy an ounce of silver today. What happens to the price of silver, if anything?
Well, I think the more important thing, Max, is what the big money does. I think it's important that individuals want to buy an ounce of silver, and almost anyone in the world can buy an ounce of silver. Maybe it's not 1 million people, but 1 billion people. But you got to appreciate that there's a lot of institutional money around. For example, we're going to be starting a mutual fund just for Canadians that will only buy silver. That hopefully will be tomorrow in Toronto. And we would expect a large flow into that fund, which in itself might buy 1 million ounces. So if we get these institutions that want to be involved in the silver market, it will be, I think, more significant than individuals, certainly more significant than 1 million individuals, but I think there might be more than 1 million people who realize that the writing's on the wall for the fiat currencies that would be much prepared to buy well more than an ounce of silver.
Yeah, but we know the markets are dominated by institutions. We know the institutional money is coming in. We know that the central banks are buying. We know that major hedge funds like John Paulson are the huge position in gold. But let's talk about that retail person, that 1 or 2 ounce buyer. I know that's not your target audience, but this goes out to the world of millions of people. This show goes, 200 million people over the satellite system. The point is, can we, through that 1 or 2 ounce buyer, at what point do they start to take over the price discovery? That's what I'm talking about. This huge army of people who are disgusted with the fraud in the banking system.
Well, Max, I have no doubt that people are doing that already. So, for example, I mentioned that we have a website called sprottmoney.com where we sell small amounts of silver to Canadian investors, Canadian retail investors. And I've always encouraged anyone who could to either buy gold or silver as an alternative to fiat currencies. I think that the audience is much larger than 1 million, and when you see what's going on in China and India, where they have many billions of people who apparently line up every day to buy gold and silver, it's going to be a big factor in the silver market. There just is not a big surplus of silver, and when you bring in the marginal new investor, it'll just exacerbate the shortage that I believe we already have.
All right, Eric Sprott, we'll have to leave it there. Thanks so much for being on the Keiser Report.
Okay, Max, my pleasure. All the best to you.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey.